We're now joined by Sameer Sikseria, CFO, and Milind Lakkad, CHRO of TCS. Gentlemen, thank you very much for joining in. Sameer, first question, margins. What a strong margin performance. We've not seen 26% for, I think, close to 3 years. What led to it? Break it up. And is it sustainable? Or is there scope to improve it?
So 26%, we are very pleased with it. We are touching our guiding beacon, and that's something which we have always believed in. If we look at, so that's a 100 basis point sequential improvement. And if you look at it, that's in spite of a 90 basis points headwind coming in from higher third-party expenses and increased travel expenses, which was offset by 190 basis points coming in from bottoming out of subcontractor costs and productivity and utilization gains.
So subcontractor costs have bottomed out?
We believe so. It's at 4.6%. That's 150 basis points lower than the previous quarter. I think now it would still depend on the macro, how it plays out, but we believe it is bottomed out, and we should...
And what's the outlook on margins going ahead? Does it stay at 26% other than the wage hike quarter? Say next time, exit margins for FY25. Can it be better?
So let's be happy with what we have been able to deliver in FY24, and exiting Q4 at 26 is really special. We are happy with it. If you look at the past 3 quarters, we have almost delivered 100 basis points sequentially, plus minus, but 100 basis points coming in each of the quarters. So, and we'll continue our focus on disciplined execution.
You know, Kriti and NGS was telling us earlier that FY25 is going to be, and NGS said much better than FY24. So there is a bit of a operating leverage or whatever you want to call it, right? So margins perhaps could be better if growth picks up.
So definitely growth is a big lever on margins, and if growth picks up and is better, it will definitely accelerate the margin journey.
And do you think growth is looking, as you from your vantage point, is looking stronger?
I'm sure
the year ahead is looking stronger?
I'm sure Kriti and NGS would have given you better color, but we believe FY25 will be better than FY24.
Milind, headcount is down for the 3rd consecutive quarter. You know, so do you think it's going to continue to moderate from here on?
Yeah, no, I think Sameer talked about productivity and utilization. All of that stuff is all coming together, and plus our investment made in the past. All of that together coming together is what this result is going to be, right? You know, this is last quarter you asked me, and I said, yeah, I will not be surprised if it is negative, and it is turned out to be a lesser negative number. So we expect to drive the same kind of efficiency going forward. Growth will come, we'll hire more, and then we'll have...
So to drive this efficiency, is it possible the next quarter again headcount declines?
No,
will you be surprised?
No. Let me put it this way. I think it's a function of our efficiency, what we hire, how many we hire, and eventually what the business growth is going to be. All of this together, whatever that outcome will be.
You know, Milind, the linear relationship between growth and number of people that you need, right? That has not been true for a while now, right? I mean, there's non-linearity. You can do more with lesser number of people.
If you bring in the time dimension into this,
it's still,
you can still relate to it. But our intent all along and our drive all along is to basically have a soft linkage to these two things.
Right.
Headcount growth versus revenue growth.
Right. No, my point was now with AI etc. as well. Can you give us a broad sense how many people that you potentially would have hired you did not because of these new technologies? I mean, if you can give us some sense of that.
Prashant, it is too early to say that. Currently we are in a POC mode. We are doing hundreds for POCs, actually 300 plus POCs we are doing right now across customers.
Sorry, POCs?
Proof of concepts. Proof of concepts. With our customers. All of that, and eventually coupled with all the other enterprise-related challenges, all of this will take some time to basically come to that point. So we will play, and we'll obviously keep you posted as we go along.
But you don't think it's already happening?
It is not to the point of enterprise level changes at this point in time. Customers are still testing out. Customers are still figuring it out basically how it is going to be all work out. How eventually the accountability of the software generated by AI, how it is going to be managed.
Because now you're saying that, I mean, if you talk to educators, it says they don't need to learn, kids don't need to learn coding anymore. You can tell the computer to write the code, ask it to do it, and it'll do it. So at a very basic level, simple, I mean, of course, you'll always need programmers and, certain set But the vast majority, you think, this
So
will
I
be a
think
challenge?
you will still, basically the role of the developer will change. The role of developer will change. There will be an, AI co-pilot which will work with you to get the job done. How will you get the job done from an AI co-pilot? What will you do? What is your role change that is going to happen is currently being reimagined in TCS and in the industry.
Samir, do you think peers may have dropped the margin threshold to chase growth? Is this something that you've seen in the industry? Not you, but the industry, your peers.
I can't talk about peers, but I think we have always believed in growth with profitability. We'll never let out an opportunity for growth at the cost of profit. I mean, just because of profitability or margin thresholds, or nor will we chase growth just for the top line, which does not do a value add for the customer, for us as an overall enterprise.
Okay. And Milind, on demand right now, so far you're able to manage the current demand with a lower headcount, which is what's driving your utilization, productivity, etc. When do you think the company will start hiring to meet demand, which you can't meet with your existing
We already are
employees?
hiring. We hired a whole bunch of
But
numbers.
the net headcount is falling, right?
But the point is, we are hiring the point is big numbers are hiring. There are people who are leaving. The point is, yes, net headcount is dropping. Eventually, when the like he says, as the business start showing more positive signs, then we are anyway going to ramp up like we always do.
Is this going to be just-in-time hiring, or you think there's already slack in the system?
We do. There is already slack in this. There is always some slack in the system, right? We always keep that slack.
So it's
that
not
we can-
necessary if growth picks up in 25, it would be a net positive number on the hiring front.
No, it can be, and there's a very high chance of that it will be.
It will be.
Okay. I mean, at what point of growth do you need to start hiring? I mean, if I can put it that way.
So you mean to say we are anyway hiring Prashant?
At a net level. So
Net level.
when will that net number tick positive?
Yeah, I expect it can happen as early as next quarter.
Okay. Because the assumption is that if growth is going to pick up 2 quarters down the line, you need to hire today and train them so that when demand picks up 2 quarters down the line, they're ready.
So let me just put it this way. From campus, we are the first ones to go to campus. We already basically gone to our priority institutions and made tens of thousands of offers.
Okay.
We already started NQT, our phase has started. So all of that is proactive. Now, from the market, from experienced talent which we get every quarter based on the required demand.
What's the fresher addition that you're planning for FY25?
So it is hard to give the number right
But
now.
you always give us a number, right?
I give a number of 40,000 40,000 every year. I don't expect that number to change significantly this year, but I cannot tell you exactly what that number will be.
But you had a strong start this year, right? Campuses, etc. as you said.
Yeah, absolutely. That anyway is a core part of our strategy. We will go to campus every year, no matter what.
What kind of deals do you see where there is room to ask for better? I know it's a overall tough environment, but are there any segments which are doing well and where you still have pricing advantage in that sense?
So we'll have to look at pricing at a portfolio level.
Yes.
And pricing, so if margins have to improve from here, we believe pricing will be one of the biggest levers, or need not be one of the biggest levers, but one of the major levers playing in. But pricing doesn't mean it will change overnight. So you can't go to a customer and say, I'm hiking the prices next day. But it will be more structural. It would be more evolved over the period. It would happen through portfolio level changes, subtle changes. When contracts come up for renewal, pricing will see an increase. The new deals which will come up will have an overall higher price baked into the deal itself. That's how we'll see the pricing change. If you look at our realization, and I'm talking of realization which has productivity benefits also baked in, but realizations have been steadily inching up over the last 5 quarters.
Do you want to put a number to it? How much have...
If you look at the revenue per FT, it has increased substantially.
It's increased substantially. You believe FY25 is going to be better than FY24, right? By how much? And when? Right now it appears that earnings growth is steady. The revenue growth is steady. There is no pickup. Revenue growth in March is similar to the revenue growth in December. When does it start picking up in your own assessment?
Well, rather than putting a specific timeline, if you look at it from a medium to long term perspective, given the deal wins which we have been having, and the overall demand drivers which are in place, we are fairly positive about it. Near term, as we see, is fairly cautious and cautionary.
Okay, we're going to leave off on that note unless you want to revise that to a more optimistic note. Samir, but thank you so much.
But he holds on that FY25 is going to be better than FY24.
Absolutely. Samir and Milind, great conversation as always. Thank you for sitting down with us.
Thank you.
Appreciate it.
Thank you. Thanks a lot.